Welcome to this talk on the 1929 stock market crash and its global impact. The 1929 crash was not just a financial event. It reshaped nations, political systems, and the global balance of power. To understand the collapse, we begin with the Roaring Twenties. During the 1920s, the United States experienced rapid growth. Factories expanded, consumer products spread, automobiles and radios became common, and many believed prosperity would last forever. Stock prices rose rapidly. But much of this growth was based on speculation, not real value. Many investors borrowed money to buy shares, a practice called buying on margin. This created a fragile bubble built on debt and optimism. In October 1929, confidence cracked. On October 24th, known as Black Thursday, panic selling began. Bankers attempted to stabilize markets, but fears continued. Then came October 29th, Black Tuesday, one of the most dramatic days in financial history. Billions of dollars in value disappeared. Banks collapsed. People lost savings, homes, and jobs. But the shock did not stay in America. It spread across the world, triggering what we know as the Great Depression. The United States was the world's biggest lender and trade engine. When it collapsed, credit froze worldwide. Banks in Europe failed. International trade dropped sharply. Commodity prices collapsed. Unemployment soared from America to Asia. The crisis triggered a global economic breakdown, but each region experienced it differently. Let's examine how today's top economies were affected. In the United States, bank failures and mass unemployment led to extreme hardship. Franklin Roosevelt's New Deal introduced public works, banking reforms, and social support. The economy recovered only fully during World War II. China in 1929 was politically divided and largely agricultural. The Depression lowered foreign demand, but internal conflicts mattered more, including civil war and Japanese invasion. This period contributed to the eventual communist victory in 1949. Japan faced declining exports. Leaders responded by pursuing military expansion, beginning with Manchuria in 1931. This shift shaped its path to the Second World War, and later U.S.-supported Reconstruction made it a modern industrial power. Germany relied on American loans after World War I. When credit dried up, banks failed, and unemployment soared. Economic despair fueled the rise of Adolf Hitler and the Nazi regime, setting the stage for another global conflict. India, under British rule, suffered falling cotton and jute prices. Farmers struggled, and poverty deepened. As economic pain grew, so did the desire for independence. Mahatma Gandhi launched the civil disobedience movement in 1930. The United Kingdom faced high unemployment and industrial decline. Britain left the gold standard in 1931, allowing currency devaluation and gradual recovery. France entered the Depression slightly later, but soon, banks and industry suffered. Political instability followed. The Popular Front government introduced labor reforms before World War II interrupted progress. Italy, already under Mussolini's fascist rule, responded to crisis with greater state control and imperial expansion. After World War II, Italy transitioned to a democratic system and industrial growth. Brazil depended heavily on coffee exports. When prices collapsed, a political revolution brought Getulio Vargas to power, who pushed industrialization and state development. Canada's economy relied on exports like wheat and timber. With prices falling and drought striking the prairies, hardship spread. Government work programs and wartime industry helped recovery. These interconnected responses show how deeply the world was affected, economically, socially, and politically. The 1929 crash reshaped global economics and politics. It ended the era of unregulated financial markets. Governments adopted stronger banking rules, social safety nets, and economic intervention. The crisis fueled authoritarian movements in Europe and Asia. It strengthened independence movements in colonies, and it played a major role in the events leading to the Second World War. The lesson is clear. Financial crises do not stay local. They spread through trade, finance, and psychology, and they reshape history. Thank you for watching. If you found this lecture valuable, please like, share, and subscribe for more educational content. See you in the next video.